Welcome back, traders. Today we will be talking about the indicators that I use. Let's get started. Before I talk about my indicators, I want to make a few changes. The volume bars, I want to have those to be the same color than the candles. So to do that, you're going to want to go to settings here in the chart, appearance. Right here it says volume bars. I'm going to click here, and now they would be the same color as the candle. Press apply, click apply. Okay, all right. Smaller. All right. Now let's talk about the indicators. So as I showed you last time, or in the second video, I think, there is literally hundreds and hundreds of indicators. Now, I have personally learned about maybe about 20 to 25 indicators, and at first it was a complete mess. I mean, I had as many indicators as you can see. It was just a total mess, and when I added them, it at that point it made sense to have them, because the more indicators the better. But as I became more experienced, what I noticed was that the more indicators I had, the more noise that was involved in my trading, and the more doubtful I would be in all three scenarios: in my entries, while in a trade, and also trying to exit a trade. Because you can have an indicator telling you this is a perfect entry, and you have another indicator telling you that it's not. Okay, and that changes based on what time frame we are talking about. If you are in a 1 minute candle, a 5 minute candle, or whatever candle it is, it will change. So you may have a good entry in your 1 minute chart, let's say in the MACD indicator, but in the 5 minute chart, you will have an indication to be exiting the trade. It can be very confusing, and it all comes down to what type of trader you are. Me personally, I only day trade. I do not hold stocks overnight, and I do not hold stocks for most of the day. My trades are usually anywhere between a few minutes to maybe 10 to 15 minutes, and in rare occasions a little more than that, but usually there are quick trades. So my indicators, it's very important that you know this, my indicators, one, work for people that are going to day trade quickly or scalp stocks, but at the same time those indicators were adjusted or are adjusted for me. What do I mean by that? For my way of trading, based on my emotions, based on whatever issues I might have as a trader, whether that be greed or fear. These indicators that I've developed are for me to help me be successful based on my tendencies. So having said that, you can see what I do, but then you have to go and find which indicators work for you, okay? And it would be great if one or two of the ones that I use work for you too. So I'm gonna break down which indicators I use and how. So first of all, I'm gonna remove the RSI indicator. I know this is a very common indicator. I have found that a lot of swing traders really like this, and a lot of traders that use bigger time frames. Now, I have seen examples where it works for day trading also, but in my experience, I haven't been very successful, and for that reason, I have removed it from my trading strategies. So let's take that off. RSI, adios. Studies, edit studies. RSI, you click the X here and apply. All right, let's go back. So one indicator that I've used almost from the beginning of my trading, and I have been very successful using, is this DI minus and DI plus. And this indicator went in combination with another one called ADX, which is an indicator based on volume, a little similar to what you see here, but it's a little different. So I ended up taking that part out of this system that I learned and just kept these lines. These lines right here work very similar like a MACD would work. Okay, if the green line is above the red line, you know, it is uptrending. As you can see here above, you'll be able to see here, you know, as the green line goes up, you know, the stock went up, 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 up to reach its peak, and then it started going down, 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 down until it did a second attempt right here. So you can see also here in this part, and then it reversed into the red line being over the green one for a while and for the rest of whatever this time frame is. I try to keep, when I'm on a trade, okay, we're not talking about the entry, we're talking about being on it already or in it, I keep a little more calm when this green line is over this red line and it's going up. If I see this type of peak and it's going down, all right, it can do one of two things. It can attempt to go green again and turn around and keep going up as a trend, an uptrend, or it can do what it did, which is start going down pretty hard actually. So just so you get an idea here, this was a trade I did today, and I actually was not able to capitalize on this, but I was able to capitalize on this section here. I was actually done trading, I met my goals, and I left after this. And congratulations to everybody got this, that's cool, but I've learned to not emotionally care about that after my trade, because this could easily gone, instead of going like this, it could have gone like this all the way down. So very happy for those who got that. I'm not, you know, for those who bought here, feel bad for them, but I made my goal, I left. So this is the one indicator that I will always use and have used. The second indicator that I want you to consider is the MACD. This is a big deal. So the MACD for me helped me have a good idea of when it would be, you know, safer to enter into a stock. And right here you can see a combination between the DI minus, DI plus, and the MACD, the green line going over the red line. This green line going over and the combination between this and the DI minus and plus is giving me a strong signal that there's a possible good entry right here. So if I was following this indicators, I would have entered right here. Once that green line crossed over the red, and I would put a stop loss either at the bottom of this same candle. Let me make it bigger. Right here. So once it crossed, right, purchase either here or here, and I would have put a stop loss either right here or right here immediately. I keep my stop losses pretty tight. If I'm in a spike or a trend, then that's great. If not, I want to be out as soon as I can. All right. So something very important that I want to show you here is that this MACD has its own standard settings, and you can go research what those mean or whatever, but I'm going to tell you the numbers that I use. So I don't use a 12-26-9. I actually use 7-14-3. So I am going to change that over here in studies, edit studies, MACD, edit, and we're gonna do 7, on the fast length. And I don't know what that means, but if I know how to use it, that's all I care about. 14 and 3. All right, let's go okay. Apply. And press OK. All right, let's zoom out a little bit. Okay. All right, so I don't know if you're able to see the difference, but these actually changed. And for me, I like them with these settings because I feel that the entries are a little more clear than the other standard settings that the MACD had. This green line going over the red line, gave me an entry point a little earlier than the MACD would. So the MACD was giving me the entry about right here, right where the DI and D plus are starting to cross and be bullish. This MACD with the 714.3 is giving it to me in 2 candles before that. This is actually my master entry signal. Once I am in the trade, then I forget about this and I go to this to have a peace of mind that my stocks are still going up. And then once I see this happen, this cross right here, this is when I get out. And this sounds very easy right now because this is a trade that already happened. And for those who are experienced, it's not as easy as just, oh, well, you enter here and you exit here and you make, so much money by trading this. Every single candle, when it's live, it's moving up and down. And you're not really sure what the next second will happen or what the next second will bring. So seeing it after it happened, it's a lot easier. But during and actually executing, that's a different thing. But in general, once I see hesitation after a spike, that's when I would be selling. This would be the ultimate selling position for me. But to be honest, I'm going to be selling way before I see a red candle. Okay, and I'm going to tell you why in a little bit. All right, so we have the MACD 714.3, and then we have the D minus and the D plus. All right, so the other two that I want to tell you about is the VWAP. And so the VWAP is right here right now. We've talked about that and how to set it up. We have the 3 bands. What I've learned from the VWAP is that price will always rotate or navigate, I guess is the right word, around this middle band. And the lower band, I see it as where the price could drop to before there is some type of correction. And the same thing with the upper band. How high can the stock go until there has to be some type of correction? Now, this doesn't guarantee you that there will be a correction once it touches that line. So for example, let's say, actually this is a good example here. So right here, let's say you buy right here and you follow this entry and you're making money and you see it reaches the upper band. All right. This hit of the upper band for me is a second to be considering several things. So the first one is this the highest that the stock will go? Maybe. Has it broken a previous high for that same day? Yes, it did. So when this happens, there is a tendency to do 2 things. The first one is to have a breakout, which is what happened here. It broke over this so-called limit of how high it could go. It could also bounce off of it, just like it did a little bit on this middle VWAP. Okay, kind of bouncing out of this one. It could have hit this, and then it could have gone down, hit this, gone up, hit this, go down, 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 hit this, go up. So you really never know, but it gives you a good indication of what you should be doing. So me personally, once it reaches this point, I am selling the majority of my position. Okay? Why? Because that is when people or traders start getting greedy. This is when the greed happens. And this whole run up here happened because of greed. Now, greed doesn't guarantee that there's going to be, a spike like this. This is beautiful. Now, this could also, like I said, it could drop hard after this. So you can have this really strong candle right here, and then all of a sudden have a huge red candle go all the way to try to touch this line or even this line. So for me to be safe, I sell most of my position here, and I then leave the rest of the shares to move along to see if there's a possibility of this going higher. And that way I protect my gains, and I'm no longer in I would say, the higher stress that I was when I first entered over here. And you'll see in the different trades that I'll show you in future videos how I did that, and you'll be able to see actually my moves in those trades. But this is just to give you an idea of how I use my indicators. The last one that I'm gonna have that I'm gonna add that I don't have in here right now will be a moving average. So let's go to studies, edit studies, and it's gonna be an exponential moving average. And it's actually a moving average exponential, which is a little different. So we're gonna add that. We'll need one. And I'm gonna have that be black. So let's change that to black. Apply. And let's change the VWAP, the blue line. It's a little too dark. It's gonna look a little similar than the moving average exponential. So let's change that to a lighter blue, which is what I usually have in my trading setup. So let's do, like a bright baby blue. There we go. All right, I hope you can see that. I don't know if that was the best color, but actually, let's go back. Let's go back and change that to a little darker. So VWAP, blue line is too light. Let's go with another blue. Let's do this blue. All right, there you go. Much better. All right, so this is the last one. The moving average exponential is a line that I like to follow after I am on a trade. Let's say that, let's see if we can find a good example. Let's say I enter right here, where I did this morning. And let's say the stock is going up and the stock is showing signs of a pullback. I'm gonna zoom in right here. The pullback, there's healthy pullbacks that are needed for your stock to continue to go bullish, and this is a good example of this. So once after we had all these green candles right here, once we had all these green candles, we have a little bit of a sell-off, but it wasn't really dropping. the trend still continued because it didn't break the lowest of the the previous trend. It wasn't breaking this, so it actually kept above. And this line right here, the moving average, if the price stays around there, I have a good idea that it's not gonna break. Most of the times, to be honest, I'm taking profits right here and closing most of my position here. But if for some reason I am keeping some shares to ride for a little more time, if the price is around this line, I will keep it. Okay. And if I would have done that today and I would have not made my goal and wanted to trade some of those shares a little longer, I would have been lucky and I would have been able to hit this, probably potentially double my profits. But as you can see, when it actually started trending down to the point where it was breaking this uptrend, you can see it significantly broke below this line. So if you were holding, a fourth of your shares and you didn't sell here, this one right here would be a huge indicator of, possibility of this having a continuation of a downtrend. Here giving you a little bit of a chance to get out, but essentially it kept going down after that. So that is how I use that 9-day moving average exponential. All right, that is all that I use. Another thing that I was gonna just show you really quick is how to use this pointer in a way that that's gonna help you in your trades. So right now it's just an arrow. If you go here to drawings, I like to use this drawing tool right here, this line called trend line. And what I like to do is figure out, before I get to a trade, I want to see the potential, or I want to see, how much this stock moved pre-market, or how much it dropped, or how do I get that percentage like really quick. If I look at this stock right here and I see that, it went from open $1.67 to $2.86. If you're really good at math or whatever, you can figure it out. I'm guessing really quick what the percentage of this run is. But with this trend line, you could just, you click here and then drag. Oh, let's do it more over here so you can see it. Click here and drag to the top of this, and it will show you right there in the little box that appeared. So from that point to that point, to the bottom point to the top point, it is 59%. So that's stock rocket. It's what people call going to the moon, basically. For me, anything going over 20% is going to the moon. And so, it went 60%, almost 60% in that small time frame. What, 10 minutes? Less than 10, about 10 minutes. It went 60%. The place where I capitalized was right here, and that was 14%. I believe I took maybe like 3 to 5% out of that, and that's all I needed to reach my goal. But it also works going down. So let's zoom out this way. Okay, so from here to this drop right here, or to this downtrend, 27%. These are very dangerous plays if you don't know what you're doing, and if you're not putting a stop loss, or if you're buying out of greed and you're trying to chase this stock right here, trying to buy where it appears to be the highest point. If you chase stocks like this, you will get burned. You will lose money. And I'm telling you by experience that when you see this happening in front of you and you are in the fourth, fifth candle, you imagine yourself, seeing 3, 4, 5, or how many ever candles going after you, being green and being higher and higher. And the thing is that kind of stuff does happen, and that's why a lot of the traders will chase this, because they've seen it before. But more often than anything else, it would actually do the opposite, and it will drop really hard. So I consider from this point, from where you were green to where right here is, I mean, it's a huge difference, you know. Let me zoom out again so we can see the percentage. From here to here is, you know, 14%, 13%. That can destroy your account. You know, depending on your risk management, if you go all in with all your money and in 2 minutes, you know, you lose 12%, that's horrible. All right, so I'm actually gonna make a video about risk management, and it's gonna be probably a pretty long video. I try to keep this one pretty short. I know that some of the previous ones have been pretty long, but I think it was very necessary to cover everything. Before I show you how I actually trade, you need to know why I do it and how I do it from scratch. So that's why the first videos were very long. I will make a video about risk management and about having a cash account versus having a margin account. What and how you should be trading if you have, you know, a small cash account. Let's say $1,000 or $500 or less. What should be your goals, in my opinion, or what were my goals when I was trading like that? Now, if you have more money, then the way you trade should be changing and should be evolving. But we will talk a lot more about that, and I think for today, and yes, I hope this was helpful for you traders, and I hope that you're able to at least pick one or two things and add it to the way that you want to trade. All right, I think this is all for today. The next video will be about risk management. I'll see you then. Look for the link below for those alerts. Also, don't forget to join the Facebook page. Thank you all for watching. Make sure to subscribe, like, and hit the notification bell, and I will see you next week. Adios.